Let me also welcome on board Mayuresh Joshi, who is joining us on the show right now. Hi, Mayuresh. Help us understand that which theme are you picking up in the markets right now? Because of late, we are witnessing a lot of sector churning. And today, of course, seems like it's a day of autos. But give us your sense on the markets as well as the sectors that you like.
Afternoon, Shrishti. I think it's a combination of a lot of factors why the markets are moving the way they are. Obviously, I think the news where India has become the fourth largest economy in the globe, the markets have taken that very, very positively. Monsoons have come early, and I think that's a good cheer for the markets because rural-based consumption and urban consumption, which has been lagging, along with expectations of better monsoons, cooling down food inflation, and therefore, I think the more stickier part of the food basket, which includes cereals and pulses, to a large extent, expected to come down as well, might pave the path for a rate cut cycle as we head into the next few quarters. And therefore, I think the banking system or BFS has a space and a lot of allied sectors with expectations of these measures which can take place are taking it very, very positively. And third, I think the expectation largely getting built in terms of earnings actually bottoming out in the next quarter or two, and actually showing a huge recovery because the second half has always been pegged over so many years as an earnings defining recovery half. But this time around, it might be a little different with consumption picking up, expectations of government capex continuing strongly, RBI providing liquidity, and then the private capex expected to come back, giving the impetus both from a macro and a micro perspective. Or probably helping or abetting India to stand out compared to global economies. Having said that, I think a couple of themes that we are probably looking at markets with India in terms of ratings, rankings, institutions, holdings. Alco beverages as a space is something that we believe can continue doing well. Numbers have been very, very encouraging in Q4. Expectations in terms of premiumization expected to continue for this space. Some hikes specifically for some states also expected to come through. And input costs have remained benign and are expected to remain so. Whether it's ENA, whether it's molasses, or whether it's glass prices, helping EBITDA margin expansion and operating leverage. So Radico is something that we continue holding in our domestic as well as global portfolio. So this is one space that we will probably watch out for. Because monsoons have come in early, and one theme that we were playing out over the last few quarters, since the last couple of quarters, agrochemical stroke fertilizers as a space might actually continue doing well because with the onset of monsoons, which are probably early this time round, Kharif sowing might actually accelerate. And therefore, I think the volume growth for a whole host of agrochemical stroke fertilizer companies might actually start picking up quite significantly. So farm gate prices should be relatively stronger. At the same time, I think input costs, like in the case of alco beverages, whether it's phosphoric acid, whether it's ammonia, whether it's potash, and a large part of those operations being integrated backwardly by a lot of these companies because of backward integration, the positive impact on margins can be relatively better. And therefore, earnings from a return ratio perspective, from a balance sheet perspective, I think these companies look appropriately placed as well. So Sumitomo Chemicals, as an example, is again one pick that we probably got on the mid cap space, which might continue doing well. And third, I think with all the construct that we probably got, BFS as a space might actually continue doing well. And therefore, select leadership stocks, including the likes of ICICI Bank from the larger names, Karur Vysya Bank from the mid cap names on the private side, Bank of Baroda from the public side, as well as a few of the housing finance companies to the likes of PNB Housing, Canfin Homes, can actually do well going forward as well. So I think a few of these domestic research sectors, in our opinion, is where the top line growth, the margin expansion and bottom line growth can actually be compounding at a decent pace over the next few quarters.
Okay, interesting. That's what's looking like a good opportunity in the market right now. But Mayuresh, what's the monsoon related trade right now? One can see a fair amount of buoyancy in some of the niche FMCG as well as the two-wheeler plays, along with, of course, farm equipment majors like M&M. Do you think that's a good space?
After the show, absolutely. And again, I think, as I said, it just does not give impetus in terms of how the Kharif season will play out. But if monsoons are good, which everybody believes, I think the next Rabi season might be equally good as well. So one of the sub themes when it comes to rural spending, it actually is agrochemicals, fertilizers, as I said. But if you probably go to the bottom of the pyramid, If things improve, I think selective FMCG plays might also start coming through quite effectively in terms of how consumption patterns will play out. And therefore, when FMCG companies depend a lot in terms of rural volume uptick, specifically since Q2 or post Q2, and specifically the second half of this fiscal, might actually improve quite significantly. And therefore, I think FMCG selectively as a space, stocks like Marico, Britannia as an example, Jyoti Labs as an example, can be kept on your watch list. Obviously, I think the lower rung items, when you're talking about retail players or apparel makers whose pricing is below 500 or 1,000 odd rupees, catering to tier 2, tier 3, tier 4 towns. So names like a V-Mart Retail, names like a Vishal Megamart, but actually show compounded annual growth rates, which are far higher through the sluggishness that they've probably got in the last few quarters. Even footwear players, to a certain extent, might actually start showing that resilience that one probably expects to come through. And therefore, I think an indirect way of probably playing this might be these players. The obvious choices when it comes to rural will be agrochemicals, will be tractor makers, will be two-wheelers. But I think a bit of these sub-segments that I just spoke about might actually improve drastically in terms of their earnings outlook once discretionary spending starts coming back.
All right, so let's watch out for some of those names. But other than that, within the broader market space, what's really doing well is a stock like BEML. And Aditya, if you can help us with the chart check on this counter, because the management commentary was indeed on the positive side. There has been a double-digit growth in the EBITDA as well as the bottom line and the profit figure as well. And the analysts are expecting the margins to expand in the times ahead on the back of better execution in their metro as well as Vande Bharat projects. But Aditya, after a 16 to 17% jump, do you believe there's more upside, or the stock should wait out and try to take a breather at these levels?
Srishti, I think there is some more upside for sure. Somewhere between 54.50, 54.60 is where I think stock can test levels. Apart from that, after that, I think stock will enter into some kind of a consolidation zone because it has to digest this kind of a big up move that we're witnessing in the stock today. The heartening factor is we are witnessing excellent volumes in trade today. I think I'm not seeing this kind of volume in the stock for the longest period of time. So this kind of volume suggests that yes, there is massive buying in the stock, and this kind of volume usually leads to a sustained rally, if anything else. But yes, after 54.50, 54.60, stock can actually enter into a consolidation phase, which will be a good time to enter into the stock if it witnesses some kind of a profit taking or consolidation. If you already hold it, have the stock in your portfolio, continue to hold for a target of 55.50, 55.60, sorry, 45.50, 45.60. If you're looking for a fresh entry, maybe wait it out for some time before you look for a fresh entry in the stock.
Richard, where is your sense on where one can trade either the defense names, which have already had fair amount of run up, or for that matter, railways, which are now beginning to catch up?
So I think as within the defense space, we believe that this is an uptrend which could last for a few more months going ahead. Certain stocks have already run up, but within those names itself, we like BDL, BEL, where the price volume action have been quite strong. Even BEML today, we have seen a breakout from its previous swing highs with very high volumes. So I think defense as a space would continue to show a good relative outperformance. So any kind of dips should be now used as a buying opportunity. So this remains a buy and dip space for us. Apart from that, railways, I think just from a trading perspective, we could see another leg of up move, whereas recently we saw an up move supported by good volumes. Some consolidation has been there since last 3 or 4 trading sessions. But we have not seen any kind of volume-based selling happening in the stock compared to the volumes, which were good when the stocks ran up. I think a couple of names such as Railtel is there or Titagar Wagon, looks quite robust on charts. So I think one is looking from a delivery-based perspective from the railway space, then Railtel or Titagar Wagons could be a couple of names where one can initiate fresh positions from a positional perspective.
So let's watch out for those select names within the railway pack. But just a few minutes left for the markets to shut shop, and let's also get you some of the trading ideas from our experts, and let's find out their BTST or STBT trades rather. And Aditya, you go first. Tell us which is the stock that you're eyeing right now.
So I've got a couple of buy recommendations. Srishti, the first one is a stock from the IT space, a large cap Infosys. I think after a decent bit of a correction, stock is now getting up for a big up move. And IT as a space, I think, is looking up and away. And in the next few trading sessions, you might see an up move in the IT space. So Infosys is a buy for me for a target of 1650 on the upside with a stop loss at 1540 on the downside. The second stock is Crompton. Again, this is one stock which has bucked the trend of late and has witnessed a consolidation and is breaking out of a bullish flag and pattern. So at current levels, I'll be a buyer in Crompton for a target of 385 with a stop loss at 345 on the downside.
All right, so those are the two buy calls coming in from Aditya. But Ruchit, what about you?
So a couple of names that we like. One is the large cap stock, Larsen and Toubro, where post the recent price-wise corrective phase, the stock has again started that high top, high bottom structure. And what we can observe that whatever corrections have been there recently, there have been more of a time-wise corrections where the stock consolidates in the range for 5 to 6 trading sessions, then again resume its up move. So I think the volumes are also good along with the price up move. So we expect slow and gradual up move to continue in L&D. So traders can buy at current market price with stop below 35.40 for potential near-term targets around 3850. And Hudco is another name which is looking quite positive on charts. Again, one of the stock which has seen a good amount of consolidation over last few days. And this entire consolidation phase, its key moving averages support, such as 50-day EMA or 200-day EMA, has not been broken. Now the price is on the verge of the breakout. And if you look at today's volumes, then it is quite better than what the average volumes of last few days or last few weeks. So it's on a verge of a breakout along with very good volume. So I think this could show a relative outperformance in the broader markets. So Hudco can be bought with stop below 232 for potential targets around 254.
Interesting. Yeah, Hudco is definitely seeing quite a big move in today's trading session. Mayuresh, where is it that you're finding opportunities within the entire realty-related theme?
I think names like DLF is something that we continue holding, Aisha, onto our global portfolios. I think the numbers are very encouraging this time round. And obviously, I think we are into the fifth year of the real estate cycle as we speak. So the expectations in terms of how inventory built up is happening across buckets, whether it's the premium inventory, the mid-premium inventory, is something to be watched out for. Obviously, the sales velocity in terms of pre-launches have come off a tad bit in the recent past. And therefore, I think the markets are taking it in stride in terms of demand-supply dynamics to a certain extent. But DLF has the opportune business segments that they're present in, residential, commercial, as well as the annuity kind of a business, which probably protects them when one side of the business probably goes through some sluggish period. And obviously, expectations are that the collections should remain strong. The kind of launches that they've announced in the previous few quarters, the expectations in terms of collections from these launches should be robust and strong enough as we head into the next few quarters. And the annuity stock commercial business should also be holding up pretty well, both in terms of renewals as well as rentals expected to pick up pace, both in terms of percentage increases as well as the fit outs that probably happen. So DLF is something that we continue holding in our global portfolios. But as I said, I think a few of the housing finance companies as a proxy to the entire sector might actually do well. Stock like PNB Housing, which has garnered enough confidence through its affordable segment that it has forayed into a few quarters back with higher yields and expectations of better underwriting, providing comfort in terms of slippages, not probably going off the book in a significant manner, actually might prop up the book value and expected earnings and return ratios from this. So I think the way we look at it in terms of ratings, ranking, institution holding as we can cancel it, housing finance companies like PNB might actually do.
All right, so those are the picks that Mayuresh likes within the financial space. But with this, Ruchit, Aditya, as well as Mayuresh, thank you so much for taking the time out and speaking with us.
If you like this video, then like, share and subscribe to ET Now.